China's factories slide lower back to slower increase amid wide demand lines. Beijing China's factories lapsed into slower boom in July just a month after rebounding strongly, with persistent call for weak spot and home COVID-19 outbreaks throwing the US of A's large manufacturing quarter again into a fresh length of uncertainty. A personal ballot with the aid of Caixin on Monday showed manufacturing facility activity increased at a slower pace in July. That got here on pinnacle of a bearish legit survey on Sunday indicating the world absolutely contracted remaining month. The Caixin Market Production Shopping Managers Index (PMI) eased to 50.4 from 51.7 in June. The ballot showed, well below expectations for a moderate dip to 51.5, however above the 50-point index mark that separates boom from contraction. On Sunday, the reputable manufacturing PMI from the National Bureau of Statistics (NBS) swung to 49.0 in July from 50.2 in June in a sudden droop. China's production hubs together with Shanghai noticed a solid rebound in June from big COVID lockdowns in spring, however the momentum had already shown signs of breaking, amid fresh virus flare-ups and weakening domestic and international demand, in addition to a prolonged assets market droop. The surveys propose that China's financial restoration slowed in July as the one-off enhance from reopening diminished, stated Julian Evans Pritchard, senior China economist at Capital Economics. It is consistent with our view that interest will stay underneath trend in the coming quarters. In the Caixin survey, which targeted greater on smaller, export-oriented groups, a subindex for output signaled a second monthly upward thrust, however changed into surprisingly slower than June. Growth in new orders home and export also softened. An index for employment fell for the fourth month and dived to the bottom in 27 months. Companies attributed the team of workers dropping to cost-cutting, subdued sales and the non-replacement of voluntary leavers. Companies, strongly willing to decrease expenses in the face of gradual marketplace call for, have been careful about expanding their body of workers, said Wang Jie, senior economist at Caixin Insight Group. In one colorful word, companies' enter costs rose solely barely after relentless price rises that squeezed earnings margins. However, they needed to reduce their selling costs for the 0.33 month in a row because of smooth call for. The rising toll on China's economy is evident with the USA's pinnacle leaders signaling their preparedness to overlook the government growth goal of around 5.5% for this year and that specialize in accomplishing the excellent results possible. Stressing the third area will be an essential length to get the economy returned on the right track, Wang predicted no big stimulus measures. Effective implementation of present guidelines is a more sensible alternative.